The hype is only over when Bitcoin says it's over. And it's inevitable that Bitcoin is going to make all-time new highs in the medium to long term. Institutional money hasn't come in any big way because regulation isn't there yet. But though we know it's likely, like super high probability, to make all-time new highs 6 months, 12 months, and beyond, what's likely to occur over the next 7 days? Today, because I've been trading the markets, the financial markets, for 15 years, crypto for 5 years, and there's particular patterns, especially in crypto, that unfold. And today I'm going to share a particular pattern that tells us what's very highly probable going to occur in the next 7 days. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Bitcoin. So yesterday's video, I spoke about this 5-wave pattern that we'll see in the markets, not only in Bitcoin, but in all cryptos. 1, 2, 3, 4, 5. Typically after a 5-wave follows what's called a correction, an A, B, C. Ralph Nelson Elliott in the 1800s, 1900s did this sociology study, and he showed the markets even back then just had this crowd herd mentality. The psychological mood reflects itself in the price. And what's obvious to see once you know the methodology is what's very likely to happen next. So medium to long term is very evident. You know, the fundamentals also back this up as well, but just purely from a technical basis, what's really highly probable is this. All-time new highs. But we're talking about 3 months, 6 months, 12 months, and beyond, right? There's a lot of stuff that still needs to happen. But what we're going to focus on today, and what you're most interested in, I'm guessing, is the next 7 days. What's likely to happen in the next 7 days that you really want to be paying attention to. And by the way, if you want to learn how to do these Elliott wave counts, I've been doing them for 15 years in the Forex markets and in the crypto markets. It's just uncanny because I think it was Arthur C. Clarke, he said, any advanced technology or science is indistinguishable from magic. And sometimes it looks like magic, but it's actually just psychology playing out. So I've got a free Elliott Wave Masterclass in the link below that just upskills you on learning what Ralph Nelson Elliott figured out in the 1800s, 1900s, but it applies incredibly well to the crypto markets today. So what we're going to focus on today is actually this last part of the wave, this wave C. Right, so I'm going to pop out of this chart, and you're going to see two charts. We've got the weekly chart on the top left-hand corner and the daily chart in the top right-hand corner. Why I'm showing you like this, I just want to make it clear to you that the information that we're going to look at, this over here, this wave C, is what this is over here in the top right. And this is what we're going to focus on over here because we're going to focus on this part of the movement and especially this part of the movement, right? Hopefully that makes sense. So now we're going to zoom in to the daily chart, the top right-hand corner. Right, and there's a few things I really want to pay attention to, and I want you to pay attention to, because this last part of the market is called a wave C. It's called a wave C, and it typically breaks down into a 5-wave sequence, and this is psychology playing out. And if you understand this and you understand the methodology, have confidence in it, it can give you some really valuable information to be on the correct side of the market and also be out of the market when you don't want to be going long. So I'm going to show you a couple of things. Firstly, this last part, which is the wave C that we saw on the weekly chart, again, this yellow line or the orange line, it breaks down into a 1, 2, 3, 4, and it looks like the final part of the 5. But what we're going to do is a little bit advanced in Elliott waves, but I cover it in the masterclass in detail, is this last part, this wave 5. Now, what I learned over the last 15 years, I learned it a while ago, but you see these patterns literally showing up again and again and again, and that's the whole point. There's only a limited amount of ways the market can unfold, and that's why Elliott waves can be so powerful. So this last part of this orange part is called the wave 5, and this, just like the wave C, also tends to break down into 5 waves. So I've got a little challenge for you. Can you see a 5-wave structure unfolding that's not complete from this high over here going down? Let me see if I can get this. From this high over here going down. You can also look at the chart with something called closing data. This may help. Right, if you had a guess, All right, so what I see, I'm going to keep it on closing data for a second, is a wave 1, a wave 2, what looks like to be a wave 3. It looks like a wave 4 forming. Either is complete or is about to complete. And then if that's the case, why is it so valuable? Because it means that we should anticipate in the next 7 days one more move to the downside. Right? One more move to the downside. I'm just going to change the color of this to red just so we can. This is called multiple degrees of wave counts. So we're looking at, a macro ABC. Then we're zooming into the wave C, which breaks down to 5 wave, which is the orange. And then when they're zooming in to the last part of the orange of the wave 5, which also breaks down to 5 waves, which is the red. Now, it's, the way I trade is I just go by this, right? We ignore the news because the crowd is usually wrong. The news is baked in, the fundamentals are baked in. It's all about how the market as a whole is feeling. And that's going to dictate the buying and selling behavior. And this can give you a massive edge. So if this is the case, what should we anticipate? So again, you can flip between bars and closing data. Both have pros and cons. I'm going to keep it on closing data now. So bar data, should I say? So let's just get rid of this yellow line for a second, just so we can stay really, really focused on the red. If this is the case, what should we expect? Well, if this low is taken out, I'm going to make it black so it's just a bit more obvious to see. This will be the first really clear signal that this wave 4 is likely to be a wave 4, and then the price is likely to go below this point. Where will it likely go? Well, we'll wait in the next few days. If this occurs, with TradingView, by the way, you can right click and you can create an alert, and you can write a note. So I'm just going to write a note on update YouTube on. All right, it's called it's a wave 5 of wave 5 of a wave C. I'm just going to write price. All right, so I'm just writing myself a note, and then if it goes below this point, then it's worthwhile because there are going to be some shorting opportunities as well. One other thing that I want to finish on today is momentum. There's thousands of momentum indicators. My favorite by far is the stochastics RSI. I'm going to double click because I've got it set already. And the reason it's my favorite is it gives you valuable information on the rate of change. And what it tells you is when the blue line and the red line are above this black line, it tells us that a local top in terms of momentum is likely. And if that coincides with pattern and price and time, we're not covering price and time today, but if it coincides with pattern at least, it gives us a high probability that what we're anticipating is likely to occur. So we can get the edge in our favor. So because the momentum it's called overbought and likely to go bearish where the blue line goes below the red, that goes with our thinking that this looks like a wave 4 and that we are likely to get one more move to the downside. And this is a really important move. We don't know how far it's going to go yet, but it's important because if it does unfold like this, well, one, it will panic the whole market. So that be prepared for that. But two, it means we can really, really prepare ourselves for the end of a major correction that's been occurring since November this year, which we're referring to as a big ABC correction. And then that's normally the reversal point. Now, if it does go below this, the news will tend to be extremely bad. And the herd mentality would be, it's going to tank to whatever levels, even lower. But we can have this edge in our favor because we are looking at the psychological mood in an objective mechanical way using something called Elliott waves. So there you have it. So then we've got some really clear wave counts. The probability based on momentum and pattern is that we are likely to get one more move to the downside. What I would normally do is just wait for the momentum to go below this black line and then review the price action. Review where is the price and the buying and selling behavior, and then look to take whatever actions are required. So there are some short-term, next 7 days, like shorting opportunities, which we can look at. But the big opportunity is going to be when this finishes and then we get a reversal but there's still a lot of work to be done. So if you want to, if you like the sound of this Elliott wave, it's by far the most powerful thing that I've ever come across when it comes to reading the markets. Take my Elliott wave and Fibonacci masterclass, and it really, really upskills you and takes you to a whole new level. And if you like today's content, because we're into a lot of detail today, but still on the macro picture, so we're confident over the next, 6 months, 7 months, 12 months, 24 months, that we're going to see all-time new highs. But immediately when we zoom in, it's likely that we're going to see more downside movement based on momentum and patterns, what we looked at today. So I'm going to finish on a quote today. Let's go with chapter 8 today. Chapter 8, it's Henry Ford. It's Henry Ford. So he says this: it has been my observation that most people get ahead during the time that others waste. The best athletes in the world are doing purposeful practice. So when others are resting, they're practicing. Not only just going through the motions, but they're aiming to get better 1% at a time. And there's this thing called, in trading terms, called trading in the zone. For athletes, it's being in the zone. And it's about finding your level and challenging yourself 1 to 4% above your level. It's also, just by the way, as a side note, the secret to happiness, to keep growing. So when you're learning Elliott waves for the first time, is to be easy on yourself to kind of just get familiar with this 5-wave sequence and 3-wave corrections. Here we are getting the 5-wave sequence on the downside of a wave C, and then it's breaking down again what looks like it's almost textbook, another 5-wave sequence. But if you can keep practicing that and seeing how can you use this information to make profit, to manage your portfolio, or even to manage your emotions, to go, okay, we might get some more downside movement. That's going to panic the market. Okay, we know what happens then. There's probably going to be some more sell-off. So you can manage either just your mind, but also your portfolio. We can do what needs to be done, but also keeping in mind over the next 3, 6, 12 months, we're more than likely going to see the market really have a reversal. It's yet to be seen, but it's likely to occur because these patterns, especially in crypto, especially with Bitcoin, is really, really repeating. It repeats itself a lot. So let's finish with the hype is only over when Bitcoin says it's over, and Bitcoin is just getting warmed up. The institutions are not even in yet, not in any big way yet. So once they get in, we're talking about a whole next level of market capitalization, and the next expansion of the market is getting ready. You can feel it, but it has to go through this negative period before the next expansion. It's been happening since the 1600s, 1700s, 1800s, 1900s, with all markets, all time frames, but crypto is probably the best because there's a lot more speculation happening, so the psychological mood gets reflected much better in the price itself. So we'll keep a close eye on Bitcoin to see what happens over the coming days. But again, long term, massive bull runs. Short term, meaning 7 days, expect one more low to possibly complete this major correction that's been happening since 7 months now, November, right? So 7 months, 7, 8 months. So let's prepare ourselves. All right, I'll see you very soon.